Hi, I'm Jasmine Baker, and this is my second Giving Voice to Values presentation for Accounting 6650 with Dr. David Christensen. I have chose to analyze the Franklin Industries whistleblowing case. We'll do a little overview, and then we'll discuss the analysis. The overview is that Natalie has found some payments to an outside company that appear to be embezzlement. She takes this to the CFO and lodges a complaint. Shortly thereafter, she is demoted. She feels that this is in retaliation, so she lodges another complaint with HR. HR dismisses the complaint and says that there is no embezzlement or retaliation that has taken place. So as we analyze this case, we want to look at the ethical and professional values. Ethical values are very high for Natalie. She has honesty, integrity, fairness. She wants to do what is right for the company as well as the public. Then we have the professional values. They are very loyal to the firm, to the board of directors, and they also have a don't rock the boat mentality. They don't want to question anything. They just want to do what they're told and not worry about anything. So we have some very high individual ethics and perhaps a little bit lower organizational ethics. When we look at the reasons that could be brought forward, we want to look at materiality. This could be a multi-million-dollar company, so $5 million could be immaterial to the board of directors. We also have locus of loyalty. The CFO and the CEO approve these transactions, so they must be okay. Otherwise, they wouldn't have approved them. We also have isolated incident. Although there are many transactions, maybe they only took place over a quarter. So it's very isolated and won't happen again, or it's already been addressed and won't happen again. And of course, we have the strong argument of HR ruled that there is no embezzlement or retaliation, so therefore the company stands behind that. We want to look at the key parties. Natalie, she can lose her job by doing this complaint, or she can lose her integrity by not doing it. Denny King, he could be very embarrassed by his actions, and he could have loss of job and reputation. Board of directors, they can have loss of trust with their investors as well as the public. And they can be setting a very low ethical tone for their company. And of course, we have the public who has a right to accurate reporting information and financial information. When we think about the levers, first and foremost, we can ask Denny to provide documentation and support for Vic Company, showing what jobs they worked on, concrete evidence of the company creation, and what they have done for Franklin Industries. We can also convince the board that $5 million really does affect net income and could affect the company's stock price. We want to remove the $5 million, less expense, more income, better stock price. We also can convince the board that by ignoring this, they're setting a low ethical tone, which could lead to larger embezzlements or larger fraud. Another argument, we can threaten to go to the SEC with our findings. This would trigger a public investigation and definitely bring more publicity to the company and, of course, litigation and fines. And then, of course, we have Natalie cannot go against her code of ethics for her profession. She knows these transactions are wrong and they need to be corrected. So who do we address? The most powerful people, of course, is speak with the board of directors, and remind them that the $5 million really does affect the net income, which of course transfers to the price of stock. Therefore, they have a duty to their investors as well as the public to report accurate information and do good business practices. We also could try to convince them that they are setting the ethical tone for the organization, so therefore they want to address this issue so they don't create more openings and opportunities for embezzlement and fraud in the future, which could ruin their reputation as well as their company ultimately. And then, of course, we can explain to the board that by ignoring this fraudulent behavior, she has to report this to the SEC because it is her duty and code of conduct as a CPA. Then, as we think about SEC complaint being relevant, I believe it is with Sarbanes-Oxley. The CEO in Section 302, the CEO is required to approve the financials with no material errors, which this has material errors, therefore this is a violation. Dodd-Frank, yes, also irrelevant. Natalie has received retaliation, and she also is wanting to report this voluntarily and due to integrity, not financial gain. So this has been my presentation on the Franklin Industries whistleblowing. Thank you very much.